Hey everyone, welcome back to the channel. Today we're going to take a look at GameStop. If you're not aware, yesterday on March 23rd at 5 p.m. Eastern, they announced their earnings for fourth quarter and full year of 2020. This was a big announcement. A lot of people, a lot of retail investors are anticipating just because of everything that's been going on with the stock lately, with the thought of a short squeeze and things of that nature. But this is going to be probably a two-part video. The first one, really, we're just going to go over GameStop as a company and highlight some things that we're going to then use when we build out our DCF model to understand the company. So if you're pretty familiar with GameStop itself, you can go ahead and skip on over to the second video. But anyways, just start. Key stats, right? GameStop stock price yesterday was 181.75 at close, so that would be before they released earnings. I actually think this morning it opened lower. Market cap as of yesterday about 12.6 billion, founded in 1984, Grapevine, Texas. It was founded by actually a couple Harvard Business School graduates. The CEO is George Sherman. He's been with the company since 2019. You can look at their revenue and net income here. So net income has been getting better, while revenue has been getting worse. A little bit of a deceiving thing here is there's some goodwill impairments in 2018 and 19 that were pretty material. That actually, when you back those out, the net income would be better, and you don't have those impairments in 2020. But anyways, a little bit about GameStop. They're a leading specialty retailer, offering games and entertainment products through e-commerce and thousands of retail stores. They operate US, Canada, Australia, and Europe. They have 4,816 stores, 3,100 or basically 3,200 of those in the US, 250 in Canada, 400 in Australia, and 950 in Europe. They operate under three brands for their gaming stores: GameStop, EB Games, and Micromania. And then they also have a handful of pop culture themed stores, named Zing Pop Culture abroad, and then Think Geek in the US. And they also own Game Informer, which I didn't know until I started digging in their 10K this time, which is like the leading print and digital platform for gaming related news. So there's a lot of stuff going on with GameStop recently in their recent news. So it all started back in August of last year. RC Ventures, which is Ryan Cohen. He was I believe, the CEO or the founder of Chewy.com. He took a 9% stake in GameStop. So basically, he came in as an activist investor in a sense to try to turn the company around. December of 2020, they established a 100 million ATM equity offering plan. So ATM is at the money. So this allows them to issue stock through, I believe Jefferies is the investment bank that's running the deal. At any time, they can issue up to $100 million of stock. This is important as they discuss potentially expanding this plan. They haven't issued anything yet, but they could expand it and issue equity and dilute shareholders. And then January of 2021, this is where they entered into an agreement with RC Ventures. Basically, they said, you quit taking a larger stake in our company and quit like screwing us around, and we'll give you 3 board members. So that's what happened. And then in February, shortly after kind of all that happens, they announced the separation of their CFO, Jim Bell. He's leaving 3/26. So what is that? Friday of this week will be his last day. And then yesterday they announced their chief customer officer would be leaving as well. And then they also announced they hired a new chief operating officer, Jenna Owens, who led a lot of distribution and fulfillment stuff at Amazon. And then also they reported their fourth quarter and full year 2020 results. So a lot's been going on with them. I think, we'll talk about the risk and opportunity here, and these are definitely things to consider when we build out our DCF model. So the big thing that they talk about is their GameStop reboot. This is them basically looking at their core business, trying to stabilize it, make sure it quits degrading over time, and then start looking for strategic initiatives that they can expand in. So far along with this, right, they closed about 700 stores in 2020, 321 in 2019. And they have $408 million of cost reductions in SG&A in 2020 alone. Now, I think this is a deceiving statistic, and I think they know that. We'll talk about it when we build out the model in the second video. But yeah, just stay tuned for that. And then something that I did find interesting, they're trying to move into PC gaming, um, which I think is a huge thing, right? I think that's kind of the future of video games for the most part. A lot of kids nowadays want to build a PC. I think, there's a place there for that. Um, I think GameStop could be a good provider of that, along with like the Micro Centers and the Best Buys of the world. They're also modernizing their fulfillment operations, establishing customer care center, and increasing their online community engagement, which are all great things. And I think trying to move from the brick and mortar to the online platform. But there's also some drawbacks with this that we'll talk about on the next video when we make the model. Something to look out for though, as I mentioned, the ATM equity offering plan. They are contemplating increasing the size of the plan, so it could be definitely dilutive to current shareholders. So basically, right, they could, kind of what Tesla did, stock shoots up, they could go issue $250 million of stock, half a billion dollars of stock, so 1/20th of their total market cap in stock at a really high valuation right now because of everything that's going on with the stock. And then when the stock pulls back, right, you've been diluted like crazy. Those people bought high, sell low, right? So that's just something to be wary of and kind of keep your pulse on if you are an investor in GameStop. And then the last thing is, the big risk here is just like everything's going digital for video games, right? Like you don't go to the store to buy a game anymore. You used to go like camp out, pre-order a game, pick it up at midnight, go home and play it. My friends and I used to do that with Halo back in, high school, when those games came out. But nowadays, right, the new Call of Duty comes out. If you paid for the exclusive version, you get it 8 hours before everyone else, and just downloads to your console as soon as you know what I mean, as soon as it's available and you turn on your console and you're ready to play. So, the game piece is gone away. And people are like, oh, they're going to see huge increase in sales due to the new consoles. Well, when we look at their financials in the next video, they didn't. Um, and it just crushed their margins anyways. And there's not going to be a new console launch for probably, what, 10 years now, 7 years? It's every 5 to 10 years a new console launches. So, I think the brick and mortar store, they have to transform it into more of like a enthusiast, you know, build a PC, pick up a video game console kind of thing. Or maybe transition more into the hobby space as well, start offering like trading cards, things like that, because I know those have been doing really well lately. They got to do something more than just trying to rely on selling video games because people just don't buy them anymore. So well, it's not that they don't buy them in the store anymore. So these are just a few things to keep in mind. The second video is going to go over their most recent earnings release. And then we're going to take some of that information and build out a new DCF and price target and kind of see where we land on this. So thanks for tuning in. Questions or comments on this first video, leave them below. If not, second video will be in the playlist. So check that out to see what the valuation we come up with is today. Thanks.